Hello everyone and thanks for tuning in. I'm James Tetreault with today's Southwest Ag Grain Market Update for September 21st, 2018. Well, with the season starting to change, we are ending the last days of summer with the beginning of harvest. And although I have seen a few combines out harvesting beans, I haven't seen any yield monitor pictures on Twitter yet. I hope everyone that was planning on attending the International Plowing Match hosted here in Chatham, Kent has taken the opportunity to view the event, and I just wanted to say thank you on behalf of all of us here at Southwest Ag Partners to the volunteers that helped make this event possible. So moving into the grain markets, and we've seen corn and beans survive what seems to be their first round of harvest lows. We've seen corn reach its December 18 futures low on Wednesday, and that was $3.43. But they bounced back up to $3.56 today, thanks in part to bargain buyers. And we're kind of seeing the same story for the soybeans, where we saw November futures hit their contract low on Tuesday at $8.12, only to bounce back and finish off the week around that $8.45 mark. So hopefully those future lows are the contracted lows for harvest, and we are able to gain support from those values as we continue to progress through harvest. Today, corn is trading roughly 4 cents higher as it tries to end the week on a high note. We are seeing support from the export market this week as export sales of corn almost doubled out of the US, where we've seen 1.38 million metric tons sold. However, some cause for concern for corn prices could be that ethanol margins continue to remain tight in the US, with production likely to fade thanks in part to the US and China trade dispute. We are seeing huge domestic supply cuts out of the US, and as escalating trade disputes are cutting off US access to ethanol markets in China. We have already heard of Green Plains shutting down 2 Iowa ethanol plants due to low profit margins. So that's a story that you should be keeping an eye on. Also, as we continue to move further into harvest, most likely corn basis will likely see more downward pressure. So talk to your grain advisor and continue to create a harvest strategy. Some good news moving into soybeans. The soybean market has been seeing some increased buying that is happening with how cheap futures are. There are some indications out there that are telling us, in fact, that we are overbought a bit on the soybean market. We blew through our previous 830 support level, which could lead to even more of an upside correction. We also crossed over signal lines that would indicate a temporary bull market. However, there is some confusion in the market where we see elevators saying they will not accept any more soybeans at harvest, yet Chicago is continuing to rally throughout the week. But what seems to be happening is an uncertainty continues to rise between US and China, and that seems to be bringing some traders out into the market, and they are willing to take a gamble on the market ahead of a possible growth in the market if a China and US deal gets done. So that's all I got for you folks today. Enjoy the last few days before harvest really gets going here in Ontario. Stay safe. And this has been your Southwest Ag Grain Market Update. I'm James Tetreault, keeping the swag in ag.